that make sense?
Yes, it does. Yeah.
All right. Maria, did I explain that?
Yes. The only other thing that I would maybe throw in, sometimes we see on some of the smaller businesses that there is nothing completed on your Schedule L. So we have allowed, and we do this on an exception basis, to do a manual liquidity test. So we'll take your business bank statements and take a look at their cash assets that they have. But then we have to ask the borrowers for an actual balance sheet as well to see and plug all those numbers in. So that is an option.
Yeah. I believe the IRS rule is that if you have assets below 250,000, you don't have to fill out a Schedule L. You fill out a Schedule M2. So
actually, if you have gross receipts of less than 250,000, you don't have to file a Schedule L, M1, or M2. They won't even be there, which is why when we
so it's not even there. So that there's no real way to do the liquidity test on those without going and getting manual balance sheet and bank statements.
Yes, 3 months business bank statements. I'm going to pull out all your business debts and add up all your business deposits and see where you're at.
That's a good way to pick up loans because a lot of lenders will just decline those loans because they don't understand that. And it's a great way to get rescue deals out there. So
say that one more time, Holden.
So basically what will happen is like people will have an S corp and their distributions are, let's say they have no distributions, they have ordinary income. So they go to try to do liquidity test. Well, there's nothing in the Schedule L because IRS rules say that you don't have to fill out a Schedule L for like smaller S corps. So what'll happen is like a lot of lenders say, well, sorry, because we don't have that, we can't do the deal. And I've been able to pick up several of them by just doing the manual liquidity check that way. So it's usually an exception, but I've pretty much gotten approved every time we've done it.
It's not an exception for Fannie and Freddie. It's not. Okay. They'll allow us. The problem is when they didn't have gross receipts of 250,000 and they went and filed a Schedule L anyway. Now we can't ignore it. Now we have to use it. I would rather not see a Schedule L or a completely blank Schedule L and perform a manual liquidity test based on 3 months bank statements. Absolutely.
Yeah.
Lori, we did have another question from the group. It was if we have retained earnings or owner's draws on a balance sheet under the liability section, does that help support the liquidity if the borrower is at 1-to-1 ratio? Or, the borrower took far less distributions than actual income. So the concern is business liquidity. So Chris, I think I asked that correctly. Lori, does that make sense? Do you understand the question?
Yes, I do. So if you look at this one right here, your balance sheet, the thing is that, see under stockholders equity, it says retained earnings. Yes, the company retained earnings, but it wasn't distributed. So it's actually not income for the borrower. Okay, retained earnings means the company retained it and now it's going to flow to Schedule L, line D, line 1, part D as cash, their cash that they're holding. So retained does not mean income. It does not mean owner's draw. It does not mean owner's equity. All right, it's not their stocks. It's not income. All right, so that's what you want to watch out for on those balance sheets. On those balance sheets, I want to see the word owner's equity, all right, or salaries to officers. That's what I'm looking for. And when they have multiple employees or multiple officers, I'm going to go back and say, hey, can you break it down? I want to know what belongs exactly to the borrower if he's not 100% owner. So retained earnings, company's retaining it. Borrower didn't get it.
Yeah, Lori, that's helpful. So I was the one that asked that question. So just adding more into that, the big issue is that the distribution numbers, obviously we use if the liquidity test doesn't pass, but I'm trying to use the actual income on K1 line 1. And so if you see that on the balance sheet, if our ratio is 1-to-1, I assume that we're liquid. But if you see retained earnings, does that help with your liquidity test as you're doing a manual?
Your retained earnings are going to stay in the company. So the company looks healthy. Okay. That's the good thing. But that doesn't mean the borrower got any income from the company. So you want to pay attention to owner's equity and salary to officers.
Perfect. Thank you.
Cool. Any other
Okay.
questions? I'm sorry I flew through this. I knew it was going to be a lot.
No,
of
that's fine. So here, I think this is a good stopping point, Lori, is that here's what we're going to do. Number one, I would say I'm going to record this. I'm going to post it on the YouTube channel, and I'll send it out to everybody that was on this list. Let me actually, I probably need to take a screenshot of all the people that attended. Number two, we can, Lori, set up another one of these. If people think it was helpful, I would love to, do some more deeper dive, maybe do some more Q&A, more actually scenarios. Like, I think sometimes the scenario and the story sticks in our brain a little bit more than the actual guidelines. So I thought this was very good technical. I took a lot of notes. I would encourage everybody that attended, write down the top 2 things you took away with it and discuss it with somebody else. You'll remember it a lot better. So like maybe talk to your coworkers tomorrow in a meeting or talk to your manager or whatever. But the more you talk about it, the more likely you remember what Lori just said, because I know we went through a lot. So big round of applause for Lori. Thank you.
Hang on. I have one recommendation, is that it seems to me like, even looking around the knowledge base, there's a lot of a spectrum of people on here of just the amount of knowledge they're bringing into this call. So I think like sometimes getting like a 101 self-employment income call or a 201, because I think what could come in is there's certain people who like have a really good base level, but they want to dig in to one specific part a lot more. It's maybe a little bit more complicated. And there's other people that are like, hey, I'm just trying to get my bearings. So that would be maybe the one piece of feedback, is we may set up, like say, hey, look, this is a more advanced self-employment income coaching versus, hey, this is more of a basic. We're going to go over some of the basics.
Yep.
Versus like, so that would just be one thought, but this was great.
Yep, totally.
I hope so.
So awesome. Well, thank you, Lori. I'd say, Holden, you and I can talk with Lori offline as well. And Lori, anybody on your team. So I think bringing us all together is really good. The more we get loan officers, processors, underwriters communicating well and understand the guidelines the same way, the better we're all going to work together. MGIC also offers training every single month on self-employed. So if you're looking for 101 type stuff, I encourage everybody to do that. This was a little bit more of a 201 thing because that was kind of what I wanted to go over with Lori. So, but we'll go ahead and end this recording now, and I'll hit stop.
Jackson, I was